Good afternoon, everybody. Today I'm chatting with Andrew Pollard from Blackrock Silver. In this interview, we discuss why Andrew is bullish on silver. We also get into where Andrew thinks silver could be heading near term based on how he views the current economic environment. And we also discuss the sentiment that exists within silver stocks and silver in general, as from my view, there's always been a very rabid community of silver investors who are very supportive of silver as soon as silver catches some tailwinds. All right, everybody, enjoy the interview. Andrew, thanks so much for joining us today.
Yeah, it's great to be here. Appreciate coming on.
So I always like to ask people when we have them on for the first time that work for a company that's going after one particular commodity, which in your case is, I know that there's some other minerals there, but silver is the primary focus of Blackrock Silver. So I want to start off with your general broad thesis for silver. I'm sure when you get up in the morning and you think about, I have to go to work and I'm excited about working on this company, and you're trying to get yourself jacked up about the silver thesis, what are the things you think about or the things you tell people of why you're bullish on silver?
Oh yeah, well listen, silver's interesting because it's both a precious metal. You've got the monetary side of it with the silver stackers, and it's known as the poor man's gold. But really, what's driving consumption right now for the industry is actually the industrial use applications. You can't make a solar cell, a solar panel, without silver. Similar goes with the whole push towards EV cars, for example. Anything with electric hardwires in it has silvers in it because it's the number one conductor of electricity. It's highly reflective. It's highly malleable. So you're seeing all these new use applications, largely driven by government mandated programs like net zero. And that's a good place to be, because irrespective of whether things are economic or necessarily viable, if the government's saying you've got to do it, well, you got to do it. So you've seen solar usage pick up substantially. And that's going to be a growing piece of the consumption pie. Silver is in its fourth year of deficits, meaning what's produced isn't matched by what's actually being consumed. So I think, for example, this year, the Silver Institute just came out with their 2024 guidance, and they're seeing consumption equating to 1.2 billion ounces, but production's only 1 billion ounces. And consumption's only going to grow as more governments mandate the increased use of solar panels, of EVs. I mean, here in British Columbia, where I'm tuning in from, they're saying that gas powered vehicles are not going to be allowed to be sold by 2035. Well, if more EVs come on, the Teslas, for example, use 3 to 4 times the amount of silver, just given the amount of electronics in there. That's good. Similarly, the monetary side of it, I mean, you see how the dollar through inflation is losing its buying power every year, while gold's doing pretty good. Silver generally follows gold as a precious metals instrument. So, as people start taking their money out of the system and putting it in hard assets, silver should actually be poised to certainly not just tread water, but when it goes, it goes. The best thing about silver is the worst thing about silver, and that's the volatility. And 2020 is a good example. When the world shut down due to COVID, silver was $20 in February of 2020. By March, it was $12. By July, it was $30. I mean, this thing is, it's such a small industry, but when generalists start jumping into it, the price appreciation, the price moves can be absolutely violent. And, here we are trading around $23, $24 an ounce. Well, historically, I mean, this is looking like a good setup for when the Fed starts taking their foot off the gas pedals in terms of the hikes, and people start positioning in terms of the actual cuts. And that's when I think, I'll use gold as an example. $2,000, $2,100 gold has so far been the ceiling. Once the Fed starts cutting, I'm thinking that's going to be the new floor. And silver will generally lag gold, and then it'll start running and generally overshoot it.
I've often heard people tell anecdotes about silver bugs, that they're sort of their own special species. And We were talking about this pre-interview, how in uranium, there's this really rabid community of basically retail investors who love investing in uranium stocks. And we've seen glimpses of that in silver in the past. For example, when we have Keith Neumeyer from First Majestic on, the views and engagement we get is off the charts. And I feel like that's largely a product of the fact that there is also this really big silver community. So maybe you could give us some sort of insights or your thoughts on that silver community and how important that is for, we'll be perfectly frank here, a Canadian junior market environment that really hasn't been that great in terms of companies being able to raise money. Should we catch those tailwinds in silver? How important do you think that silver community really is?
Oh, well, no, it's a great point. I mean, uranium is a great corollary example to silver. It was, I wouldn't say equally hated. I mean, silver's got to be one of the most hated sort of segments of the market you can be in, but that's where the opportunity is. But uranium 2 years ago was quite hated as well. And it's also a small market. Silver is a smaller market and it's more hated. Now, look what's going on in uranium right now. I mean, in just the span of 3 or 4 months, it's gone from something not many people were talking about to now it's being talked on CNBC almost every other day. Jim Cramer's mentioning it. You're seeing articles in Bloomberg on it all the time. And all of a sudden, the re-rates for all of these companies, whether they've got viable assets or whether they just did a name change to say uranium in it, are seeing 30, 50, 100% movements. Companies are getting financed left and right, irrespective of quality. Silver has that potential. I mean, in terms of the community, it wasn't all that long ago that silver was making news. Remember, it was right around the same time as the GameStop, short squeeze. But we had our own silver squeeze where it was being widely talked about, and there was a rabid community of apes. And the euphoria was there, but then silver just unfortunately was suppressed. It hasn't really done what people thought, and here we are. I mean, I'll put it this way: from an asset valuation point of view, the intrinsic valuation at this point in the market is completely decoupled from market value. A good example is in June of 2022, so just like 2 years ago, right at the beginning of the Fed rate hike cycle, high-grade ounces like mine, like some of our other high-grade advanced exploration developer peers, we were all commanding about $2.50 an ounce in the ground. Now, just because of the liquidity that's been sucked out of the market because of these rate hikes, our same ounces, our peers' ounces, are trading between $1 an ounce to 50 cents an ounce, where we're trading at 40, 50 cents an ounce. Silver is roughly the same price. It just shows the extent to which the liquidity, the destruction of the most aggressive Fed rate hike cycle in history, well, certainly in the last 40 years, has just catastrophically destroyed valuations. But I guess the light at the end of the tunnel is that it looks like these hikes are now, behind us. And now it's a question of when the Fed is going to start cutting and how quickly they're going to do it, because the market's always forward looking. As soon as there's guidance on that front, money will come back in. People will have right now there's too much month at the end of the money for people, but once the variable rates and the HELOCs start trending downwards, that money's going to come in. And there's so few silver names in the industry as it is. It's such a concentrated sector that as generalist money comes back in, the re-rates will be equally as violent. Just this time it'll be on the way up, not the way down.
My view on it is that the Fed uses data that lags too much, and they were too slow to raise rates as inflation was clearly out of control. And they're going to continue with too high of rates until they just start breaking things in the economy. And so suddenly we're going to be waking up and we're going to be hearing about all this damage that's happening. And especially we got what's happening in China right now with Evergrande just this week, officially going into bankruptcy. That's historically when the Fed feels like, hey, we've overdone it on the hike part, they usually slash them pretty quickly, right? Like it's usually Like they're not too shy about going from say 5% to 0% over a couple of quarters.
Right. No, I agree 100%. And, the only sort of, thing that may make it even more interesting is the fact that it's an election year. The Fed is working off lagging data, but it's also working off manufactured data in the sense you look at these job reports, they always show these blowout numbers, which make all the headlines and they send all the expectations all over the place. And then quietly, 3 weeks later, they revise them downward and
Yeah.
they're either equal in line with the original expectations or even worse. I mean, that jobs report that happened in early January to start the year, I mean, they showed all these blowout numbers, but then you go back and you look, 10 out of 11 last months were all revised downwards. And that really kicks silver and gold. Like January, February are typically some of the strongest months seasonality for gold and silver, just largely due to Chinese buying and Indian actual consumption for jewelry and stacking. But that first jobs report, which dollars to donuts gets revised downward here pretty quick, is what sort of set this whole, will they, won't they March rate hike synopsis all over the place. And then you had that CPI number, which came in hot because, the CPI's got all these lagging indicators like rents and things like that, which and I mean, the CPI is also manufactured. They make it look any which way they want to, but ultimately things are breaking. I mean, you're seeing layoffs announced daily. UPS just this week announced 12,000 layoffs, and this is 6 months after they were boasting about how their union got all their drivers to get paid a minimum of $200,000 a year. Well, certain things just don't make sense. Things that make you go, hmm.
I have the data in front of me from the December jobs report, which was announced on January 5th. So they announced that 216,000 jobs were added, which at first glance beat consensus by 52,000. But then quietly, they revised the October number down 45,000 and the November number down 26,000. So although we beat consensus by 52,000, they took away 71,000 from the previous 2 months.
And if you looked at the dot plot for the rate cut expectations and when they'll come in, that threw all of the expectations all over the map. I mean, to put it in perspective, on December 1st, I think it was, silver was $25. Following that jobs report, it traded down to like 22.50. And it's been all over the place now. Here we are around 23, which is historically low. I mean, honestly, silver is the only real commodity out there that's trading at half of its all-time high. I mean, it was $50 in the 1980s. It was $50 in 2012. Here we are, $23, while gold is sitting right, French kissing its all-time high. And, gold's going to be the first one to break through, and that's going to be largely Fed related or safe haven related. I mean, you've got wars and geopolitical risk kicking up all over the world now. It seems every day there's new emerging threats, whether it's China or North Korea or the Middle East. So safe haven assets moving forward might be a pretty safe place to be. I'm thinking, especially given how reckless the spending policies have been from our betters in government. So I think as people turn, as inflation's a top of mind issue, I think gold's going to have its day and silver's going to lag, and then boom, and the consumption. I mean, the supply deficit of silver versus consumption, and just the growing percentage of need from these solar panels. Just that alone is 15-16% of all production. But in 10 years, it's going to be 25-30%. That's a big piece of a pie, and we're already at a deficit. So, I sleep pretty. The fundamentals look pretty good. And we've eaten a lot of crap over the last couple of years with these rate hikes, but that's ending now, and this is a time to be looking at companies just like mine, because we've already been crushed, but we've got intrinsic value. We've got something that as soon as the market turns, it doesn't go like stories move 20% in a day back in March to July of 2020 when silver started running. I mean, you'd have months where you're up like 60-70%. So for us, we went from 7 cents in March to $1.60 in July on the back of our discovery hole. So Yeah, with a supporting market, with a rising tide market, and with generalists coming in and some speculative energy. Uh, yeah, silver is one of the best places to be, but you got to have some patience too.
So you mentioned your company, Blackrock Silver. It's the first time we've had you on. Can you give our audience a quick little overview of the company?
Yeah, well, many people that have been to Nevada have driving along the side of the road on the highway. You'll see it says "Welcome to Nevada, the Silver State." Now, our project, Tonopah West, is the reason why Nevada is actually known as the Silver State. This is one of the most consequential discoveries in all of Nevada mining history. In the 1860s, the Comstock lode was discovered, which really invigorated the state. In fact, it's the reason why Nevada got its seats in the Senate. The amount of riches and prospectors that came in, and population just swelled. It helped fund the American Civil War. But by the 1890s, the Comstock had petered out, and 2/3 of Nevada's population had left. Well, the Tonopah Silver District was discovered in 1900. It led to a mass influx of people into the state. It led to a whole series of other follow-on discoveries. In the Walker Lane district, Tonopah itself is the halfway point between Las Vegas and Reno, and really this is a classic mining boom town. The guy who discovered this, one of the guys who discovered the Tonopah Silver District back in 1900, 10 years later became governor of Nevada. It's the history here is rich and very, very colorful. Like Wyatt Earp, for example, was a deputy sheriff on her property. He ran a saloon there as well. Mark Twain was through there. Even in the 1960s, Howard Hughes had come through there and started consolidating all of these old historic mines, trying to do something. And that was sort of during his peeing and mason jar days. So he didn't really end up doing much and left by the 1970s. But Tonopah itself, the reason it's known as the Nevada's known as the Silver State. It's because Tonopah in 30 years, from 1900 to right up into the Great Depression, produced just under 200 million ounces of silver and just under 2 million ounces of gold. So it's about 100-to-1 silver to gold ratio. And the reason production shut down was largely due to technical issues of the day. On our property, it was the last producing mine in the district in the 1920s, and they just kept going deeper and deeper underground. And as they went underground, these big silver and gold veins they were mining kept getting thicker and thicker. But the deeper they got below the water table and they flooded out the mine. Well, they tried to use electric water pumps in the early 1920s, and they were working just fine, except electricity wasn't all that reliable. And when they turned them on, it would lead to blackouts and brownouts. And that wasn't necessarily ideal for when you've got 100 people 1,800 feet below surface. So this company that was operating this side of the district went bankrupt because they weren't mining, and effectively, metals prices and stock prices and everyone's fortunes declined measurably in the lead up to the Great Depression. And really, Blackrock, we're the first group to come in since production shut down in the 1920s on our property, picking up right where these historic miners left off. And in 3 years, since we put our first drill hole into this project, we've now drilled out 100 million ounces of silver equivalent. That's about, on a metals basis, it's about 50% gold and 50% silver. It's just silver and gold. And we're showing huge potential. So, we've just gone into an old mine, picked up right where that last operating mine was, and we've drilled out about 4 kilometers along strike on the same vein system that they were. And it's the highest grade, undeveloped, large silver project in the world. And, silver is produced in places like Mexico, Peru, China, Russia, Bolivia. We're 3-hour drive from Las Vegas. Our entire land claim down there is on private land, which, Nevada is a good place to be as a mining company generally. But private land in Nevada is unequivocally the best setup you can have in the mining industry, because it means the federal government has no control over a property or permitting. What would take a company 3 to 6 years to permit would take us 3 to 6 months. So it's big, it's high grade, it's good metallurgy, and easy to permit. And it's only been 3 years.
So something I love to ask companies, and I'm sure that this is something that you probably can't quite quantify except for what you guys have spent. Um, Historic drilling. Do you have any sense of any number of maybe drill holes that have been put into the ground
Yep.
from your historic data, or and maybe you can get into how much money you guys have spent
I
in
can tell you
drilling
all
since you've
these
taken over
numbers
the
because
property?
this is one of my favorite facts about our project is we've got some of the lowest discovery costs in the industry, and that's impressive because Nevada's for drilling is much higher than some of the other jurisdictions where these things are produced, like Mexico, where labor is significantly cheaper. So all in for our project, we we got our project in. I think we announced it in February of 2020 when the world was shutting down. We got such a good deal on it. It was priced as if there was no ounces there. So we'll own our project outright for 300, sorry, for $3 million US all in. And in 3 years since having it, we've spent about $28 million US. So we're in it entirely for $31 million. Our discovery costs equate to about 29 cents an ounce. And we expect those to fall even further because we didn't inherit, like, this is a new discovery, in the sense that, sure, we're picking up where old timers left off, but we had very limited data. There was no historic drilling because in those days the old timers didn't do any drilling. They just mined these things. They followed them underground and they were very efficient. So we started with 0 drill holes in our database. Here we are. Our last resource, I think, had about 200 drill holes in this. For 2020, 2021, 2022, this is one of the most active exploration silver projects globally. We did 100, and I think all in that area, we've done 150,000 meters of drilling. And, the difference between starting out with no drill holes and trying to figure out which way the vein system's running. I mean, there's a lot of fishing around with the drill bit because everything's quite, it's not a surface operation. This will be an underground vein system, but there's nothing at surface to guide you. So the difference between our drilling early on is that we were trying to, figuring out which way things are running. Now, at this point, our model is predictive. All of our future expansion potential exists on known mines, on known veins. We've drilled up to here, and now we know where the vein is, and we just got to drill here, but there's no fishing around with the drill bit. So, we think our discovery costs are going to keep plummeting, but we've advanced this project quicker and cheaper than literally any peer company out there. I mean, some of our peers are in their projects for 100 million, 150 million US to get to the same point that we're at now for 30.
So Andrew, what's your goal here with Blackrock Silver? Is it to prove out the property and then do a deal on the project financing level with a major? Is it to be
Well, we
outright
got
acquired?
yeah, so we got First Majestic Silver in within a year of our first drill hole as a strategic investor. What we have is very unique. In mining, grade is king. Grade means margin, right? So the higher the grades you have, generally the lower the cost the operation is. Well, we've got the highest grade project in the industry right now. We're significantly higher than any of what I would call our high grade peers. We've got better metallurgy than them too, simply because most silver projects aren't really true silver projects. They're typically polymetallic, meaning, sure, there might be silver in what they're drilling, but there's generally lead or zinc or copper or all of these other elements. And what that means is it costs a hell of a lot more to process that material, to recover it from a metallurgy standpoint. Whereas gold and with us, you process it like ours would be a doré at site. So you're left with, you crush the rock and it's cyanide soluble. So you leach out the gold and silver. You're just left with gold, silver, and beach sand. I mean, that's really it. So the cost to actually recover this will be significantly cheaper than any other company in the industry too. So higher grade, easier metallurgy. That's why First Majestic invested in us so quickly. But, and as we're in a good jurisdiction, I mean, the world is becoming a smaller place geopolitically. I mean, you just saw what happened with Russia a couple of years ago when they put sanctions on. You just can't do transactions in Russia anymore. Well, what happens if they do that in China? China's the third largest silver producer. When the world becomes a smaller place, You got to look in your own backyard for these sorts of things. And what we've got is something that stands out globally, but it's in our backyard. It's on private land in Nevada. So this is something that any silver company in the world would want to have. And at 100 million ounces already, this is already a standalone operation. I mean, this is big enough to, if you want to develop this and start and look at going underground and moving this forward, any mid-tier or major this would hit their threshold. We're showing expansion potential easily to 200 million. We can double it very quickly because our model is so predictive at this point. So, we're moving forward this year. The last years have been focused on actually getting a handle on the geologic model. This year's focus is, we just got cashed up. We just did the first bought deal in the silver space since last summer, meaning, many companies out there can't raise a penny irrespective of valuations. I mean, the institutions are getting redemptions, and there's just no new money being allocated to gold or silver companies, especially at our end of the swimming pool. But we were able to get it done. So we're cashed up, and this year's focus is going to be on de-risking the project, looking at it through an operational and development lens. We see potential to start looking at maybe delivering a preliminary economic analysis so we can start showcasing just how low cost of an operation and high margin of an operation this will be. But also, we've got cash to drill out some of our lowest hanging expansion potential fruit. So it's going to be concurrent, adding ounces and de-risking the project. And both those things are going to help put a bigger target on our back from a takeout perspective. This is going to be this is a train on the tracks at this point. Like, there is a destination in mind. I've got no doubts that within 5 years, this thing's going to be pumping out. But, given what we have is so unique in the industry, I think, we'll advance it as far as we can. But I think given our valuation, given the expected quick turn in sentiment in the industry, I think this is the year where you start to see some premium deals come back into the silver space. And that's what's been missing. That's the reason why investors have been on the sidelines. And when you see one premium deal, you're going to see a bunch of companies like mine taking out in quick successions, but it's going to be a bidding war for them. Certainly, these valuations, I don't want that to happen, but I think there's just the industry's starved of actual good discoveries, that when one goes, it's going to be a feeding frenzy, and I think we're at that point this year.
And it's funny because I've ran into some friends of mine that are trying to raise money on various private precious metals deals right now, and I see certain names that are publicly traded, and I'm thinking, you're crazy right now. When some of the names that I see are trading at the valuations they are, and seeing what you guys have on paper, high level, how much you guys have spent on drilling, and you've actually discovered stuff. It's a little mind blowing to think that these grassroots exploration deals or early stage precious metal deals that people are bringing to me can raise any money when you got companies that have actually discovered stuff and there's no love in their stock. So,
Right.
and that's sort of to your point. Last question for you. For any investors watching this or potential investors who like what you have going on, what does 2024 look like in terms of maybe milestones or goals or timelines?
Well, the biggest knock against our company wasn't our project level. We put out our new resource in October, and this has been the only new resource to hit the silver space in the last year and a half that didn't lead to a liquidity event. We traded up to 40 cents on the back of that. Like, it was we were nearly doubling. But then, December happened and early January happened, and shorters took advantage. And the big knock on us was that we've done so much, but with so little, that, it just became apparent that, eventually we need to finance. So we were trading, up until October when we put this last resource out. For the last year leading up to that, we commanded the single highest ounce in the ground multiple of any exploration or development project in the silver space. We were always head and shoulders above everyone else. And then we put this resource out. We 2.5x'd it in terms of ounces, and we didn't 2.5x our market cap. And then so we diluted our ounce in the ground valuation fairly considerably. But the other thing that happened was people said, okay, well, they need to raise money. They need to raise money. And then there was a discount applied to us on that front. So right now we've gone from the highest in the industry to now we're trading at a half to one third of what our two other high grade peers are trading at. So all other things being equal, now that we're cashed up, we can move 2 to 3x just to get back in line with where we were previously without silver needing to move. So, I only closed this financing, I think it was on January like 26th or 27th. We've been trading really strong. We're trading up on the back of this. We've got some new really deep pockets, long-term capital that are positioned at this low valuation, but they're going to get really enthusiastic. But I think relative to our peers, we're the strongest buy in the industry right now. Like the retail, the re-rate potential on us, just because we've got, intrinsic value is completely decoupled. The only thing the market was really valuing in the last year is just cash positions. Well, we've got that now. So what we're looking forward to is hopefully a tightening up market, hopefully the Fed positioning towards or giving some indications on rate cuts and clarity there so people can start positioning. And in the interim, in the background, we're doing metallurgical studies. We want to see if we can ratchet up not just what we've drilled into, but what we recover, because that'll add ounces. We're in the process of putting together a drill program that'll target our shallowest and our highest grade vein, which is also happens to line up right where we're planning to put an exploration decline as well, which will have a huge positive consequence for any operation from a payback and IRR perspective once we look to put a PEA on this. So really just de-risking the project. We're looking at, I told you when we started this conversation that the reason production shut down in the mid-1920s was because they flooded out the mine. Well, we're looking at reinfiltration plans to pump the water that is in these old mines and use it for processing, meaning we'd have water, which is something that, you really want to have, especially in Nevada. And that's something that looks like it could be really good to go there. So we get our water sorted, we get our metallurgy ratcheted up, and the metallurgy is already really good. We look at adding some low-hanging ounces, and then we start looking at the project through a developmental lens. But the biggest thing is just the turn in sentiment, because when the money comes back in, the re-rates happen quickly, and you don't want to be on the sidelines.
Well, Andrew, thanks so much for hopping on here. I think you guys have a very exciting equity, and you do a great job of articulating what the company has going on, and it's exciting to hear you talk about it. So thanks for hopping on here, and hopefully as we see some development, you'll hop back on here in the future and we can hear more about what the company has going on.
Yeah, that'd be great. I appreciate it.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.